Good afternoon, folks. Welcome to another week. All right, so we are looking at the economic calendar for this week. The standouts for this particular FX week for GBP, our 4:30 a.m. London Open average earnings index, a high impact news event, and the unemployment rate. Then for the euro, the standout is Thursday, the ECB press conference. The other medium impact news events here are going to be standard volatility injections, but those two are the standouts relative to their respective pairs. Today is a bank holiday in the States, so therefore the brokers that we utilize for data are observing that as well. So that's why we're going to be using the TradingView app through the daily FX that you see me do periodically. So with that, let's go over to the charts. Okay, so we're looking at the dollar index. We're pulling it up through Dixie, DXY. Upper left-hand corner, you can see it here. And it's the end of day feed through TradingView. We have the sell side imbalance, buy side inefficiency shown here. So it's a fair value gap still in the weekly chart, still in play. Price came down into our weekly order block, and this is a weekly chart in case you're wondering. Trade off of that, nice reaction so far. We have equal highs, but we'll look at that on the daily when we drop down in a second. But if you look at the overall price structure, we have our consolidation. Okay, I'm not going to shade it green, just giving you the overall structure. Consolidation, we broke down, came back, retested it. Distribution, redistribution, smart money reversal, low risk buy, reaccumulation. We're in an area of another reaccumulation. So we're going to be looking to get up into this. Now, how we trade, if at all, up into this fair value gap is going to be insightful to know whether or not we're going to be making a run to higher highs. So technically, this is where I expect, if this is a market maker buy model that has a continuation lower, because they don't always come up here and clear this. Remember, they sometimes come up to about this point here and look at the lessons for market maker buy and sell models, and you'll see what I mean by this. The continuation can occur, in my opinion, up here. So it can go to that price point and then sell off. I'm not of the opinion that it's going to do that because we're in a bull market. Now, if they settle this nonsense that's going on with the U.S. government shutdown, I believe that would be bullish for the dollar. Right now, it's a hurdle, if you will, to seeing higher prices on the dollar, because it's a lot of things are being weighed on the dollar as a result of it. So I think that for sentiment purposes, it would be better for the U.S. government to resolve its tomfoolery. But overall, this is a really decent price structure. We have a nice retracement back to a bullish order block. We cleared an old high and left equal highs. So this is a classic, well-structured retracement and a continuation of a bull market. So we could see an attempt to rally up. Now, there's several things that we can consider here. Obviously, what we are looking for is a continuation on the upside to get up into that 98.50 level for the dollar. If we trade through that and get up into the 99s, we have to contend with the middle of this range, which is equilibrium. And that would look like this. So we have a price level there. We'll note that. Get it to pop up. Had that fib active still. There we are. Lovely. Alright, so now we don't need our fib. We can take this off. Okay, so our upside objectives for the dollar is the fair value gap and equal highs. So we have a liquidity pool here coupled with a weekly fair value gap. Then on the upside continuation, we get to 101, we'll call it 101.20 to 101.50 if it wants to spike that high. If we trade through this, then obviously we're looking for old highs. And then maybe what I gave years and years and years ago, I gave 102, 105, and 107 on the dollar. Long-term macro view. Those could still be upside objectives if we get through this. Now, I'm not that wildly bullish. I'm just saying that those are the parameters for upside objectives. So it's reasonable to expect the equal highs to be taken, fair value gap, that's good. We can get to this level here next, but we still have to get here first. So I'm not trying to paint the idea or sell the idea to you that we're going to 107 or even to 100 even. It's just, we don't know that. Right now, we're just using the most likely scenario is to see a trade here. Now, what changes it? If we trade through these two down close candles, then we're going to go down and close up this probably. Okay, but I'm not going to fill out the chart right now because I want you to focus on this and the rules, because I really have a disdain for people showing what if scenarios. If it goes up, this is what's going to happen. If it goes down, this is what's going to happen. This is what I'm thinking. So therefore, I want to work within those parameters. I already given you the points at which where it nixes the idea, it takes the trade idea off the table. So that's what we do as traders. We don't have a 50-50 and then whichever one works, that's the one we get paid with. That doesn't work like that. We have to have conviction behind what we think. So this is what I'm suggesting, from my own opinion, what the dollar may do. If we drop down into a daily chart, you can see the price structure here. Trade down into a bullish order block here. Rallied off nicely. Again, equal highs are the target. Just above it, we have a fair value gap. So it helps us frame how far can it go above the equal highs. Well, this is one way we can do that using institutional order flow and how we mark out inefficiencies and imbalances. So again, this is a sell side imbalance, buy side inefficiency on the weekly chart. That's what this is right here. Okay, so we'll be looking for evidences to support that continuation up to that price level and further, but we're not pushing it. We want to see if the market can show a concerted effort with intermarket analysis. All right, so we're looking at the euro dollar. Again, the data for this pair I'm using is the forex.com data feed. We can see that we have a mirror image of what we just showed on the weekly chart for the dollar index by way of the Dixie. We have a consolidation down here. I'm not going to draw it out. I'm just going to show it to you. You can draw it on your own charts. Consolidation. We left consolidation, came back, retested it. So that's reaccumulation, 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 smart money reversal, low risk sell, distribution. Now we're in an area of redistribution. Buy side imbalance, sell side inefficiency, weekly chart, euro dollar. So we could see price move lower. What changes that? If we trade through this last up close candle, and it's a wide range, I know, but that would be the line in the sand. So in other words, it has to go above this high, not this down close candle, this up close candle. Now you're probably saying, well, what's the difference? The difference is that this is where the selling was done. So if it goes back above this up close candle, I'm not interested in looking for shorts. I'm going to be then targeting these fair value gaps up here, and that would still promote enough range for me to get what I would want. Okay, and if it does that, then I think that euro dollar is in a long-term bull market, and we'll probably see it trade higher into the fall should it do this. But right now, it's not in the cards. I don't see it that way. So I'm expecting the bearish order block in here to have influence further than what we've already seen here, and continuation down into the 110s. Now, how we trade to that, if at all, is important. I'd like to see it do it quickly. Don't spend a lot of time doing it because we're in tight ranges. See how we have a lot of the bodies are relatively small compared to the larger bodies we see in these bigger moves. So the next stage of volatility should see large ranges. And with the framework that's been suggested here, my opinion is it should have large ranges on the downside, at least targeting the fair value gap here. Buy side imbalance, all buy side only. Sell side inefficiency. That's what this fair value gap is. And then if we trade down through that, the next level of interest would be the midpoint of this consolidation, which is about 106. And if we trade through 106, then obviously we're looking for parity on dollar and euro, which I think is still in the cards for a long-term macro view. All right, let's drop down into a daily chart. And you can see the overall price structure. This is really sloppy in here. Very, very uncharacteristic for FX pairs to be this long-term, higher time frame consolidation and chop. But the wonderful thing is when it leaves these conditions, it has excellent trending moves in days, and you can milk them for very easy low-risk entries. Makes it difficult, but when the prices are like this on the daily chart, you have to go to the higher time frame, which we started this review with, and analysis commentary with the weekly chart. So it helps clear up all of this and gives us a little bit more conviction on what side of the marketplace we should be working with. I don't see this anywhere as a buy. It's too sloppy. So even if we do just go down below this low here and then reject that and making the low there, that's still possible, but I'm sticking with what I've already given you thus far. Moving on over to cable, we have British pound versus the US dollar. Again, this is a weekly chart. Again, data drawn from Forex.com. We have a sell side imbalance, buy side inefficiency, fair value gap up here. And we have basically a breaker as well because this high went slightly higher than this one. So once we broke this here, if we come back up to that, that could be an interesting area to sell short. But right now we're using it as a draw on liquidity and helping us frame out this overall sloppy price structure. If Brexit is a win, or if it isn't a win, it doesn't make a difference because this is kind of like it's a black swan type thing, a gray swan if you want to call it. It's probably not going to trade in concert with euro dollar, at least for the first half of the year. I'm allowing up to that much disconnection, if you will, or decoupling. So it means there's going to be probably a lot of trades for euro pound this year as a result of all the underlying conditions for cable. Now, if I'm wrong and this resumes and goes lower, and that's fine, we will be targeting the equal lows on cable and maybe lower. So it's a little tricky with cable, and I kind of want to keep cable to whenever there's a real clear signal or setup. I don't want to talk too much about it, but right now I just think that they're going to send this thing up here, and I just don't want to be trying to give too much analysis, because the last thing I want to do is get any of my students in on something that I really am not aiming for you to do. But this pair is going to be very, I guess, harmful, I guess would be the best term. If you are trading this pair and you're leveraged, it's probably going to hurt you. So just leave it alone for now. When there's something to talk about, I will. But I'm just putting it in record that I think that they're going to want to send it up here. And it may be like a real quick, maybe even something like this, but on the reverse side, on the upside. Okay, and euro dollar could still be dropping at the same time. Remember, there's going to be a disconnection. And if it does go up to here, they could reject that and then send it right back down quickly. And then that would be getting back in sync with the euro dollar. It sounds far-fetched, it sounds crazy, but I'm just telling you my personal feeling about what may transpire with all this Brexit business. And I don't understand it, to be quite honest with you, because it's a very complex thing for me as a person from the U.S. I've never understood the European Union in terms of why anybody would want to be a part of that. But, I'm not in here to have political debates, and you're not wanting to hear my political views either. And it doesn't make a difference to me, whether you guys stay in or get out of it. But I just think that whatever may be viewed in light of the final result, if there ever is one in the near term, that it probably will be the opposite of what everybody expects it to see in the price. And that's really what I'm suggesting here. In fact, it could be so crazy that we could see it run up into this level here and then reject and trade all the way down, clear up these equal lows. And that would be like a heart attack. I mean, nobody would want to touch cable for a long time after that. And just the professionals would be in there. So that may be the black swan I'm kind of hinting at. Just be careful with this pair. That's what I'm saying. If you're trading it, do it deleveraged. Be careful. Be careful. Be careful. Stick to better pairs with less volatility, like dollar CAD, Aussie dollar, New Zealand dollar, something like that. But if there's something, I'll try to do my best to kind of like bring your attention to it. But right now, I just have to put this in record. This is what I suspect is going to happen. If we drop down to a daily for cable, you can see we have, again, relative equal highs. I like that. I like how we ran down here, rejected that, came back middle of the bullish order block, almost, basically, and then moves up a little bit higher. Nothing in here really to support a buy except for the breaker in here. I'd like to have seen it drop down a little bit more on this candle, because the wick in here, if this would have came down and stayed and closed inside of this up close candle, that would have been good, because it would have sold the retail idea that it's going to keep going lower, and then it would have been more easier for me to say, okay, this is probably a buy, and look for 133s. In here, a little tricky. Even though this wick is here, it could be ignored, and we could trade right back down into a deeper run and close up this buy side imbalance, sell side inefficiency. So we have a small little fair value gap residing in here. It could still essentially come back down there and hit that one more time with crazy volatility, and then make a surge to 133s. So I'm just putting in a recording of what I think may happen. Am I trading cable? No. Okay, I'm not. All my focus is going to be on euro dollar, and then if there's anything in the dollar CAD, or maybe Aussie or New Zealand, I'll ring in those pairs. But I don't want to do that as a constant, because it's too much information and too many distractions. I want you to focus on one or two pairs while you're in the mentorship, and try not to look for signals and setups in every other pair. Okay, so that's going to do it for this week. I'll get back with you on Wednesday with a midweek update and a lesson of some sort. And for those that have made your payment, just as a reminder, January 27th is our continuation date for those that have already made their payment for next month. So just relax. Everything will be processed on that day. So until I talk to you again on Wednesday, I wish you good luck, good trading,